Do you pay or do your children pay tax, that's capital gains tax, when you put your property into trust? So let me explain, okay? Now, before I go into answering the question directly, I've got to explain how capital gains tax work with trust in as fast a time as possible so you can get what I'm trying to say. So we have a trust and we have someone who creates a trust. And remember, that person who creates a trust is called the settlor. And then we have the beneficiaries and we've got the trustees, all right? So we've got the trustee who manages the trust, the beneficiary, which will be the children who benefit and enjoy, and then obviously you put the property, which in this case is the house, into a trust. Now, the rules for capital gains tax is that when you make a gift, when you give to someone, all right, so, or sell, all right? So if this is me and I want to make a gift, or if I sell something, that will trigger capital gains tax. Capital gains tax is if I buy something for £1 today, and in say 10 years it's now worth 100 grand. I know it's a bit of a major jump, but there's a gain. There's a massive gain, okay? So if you have £1 today, and in 10 years' time, the value goes up, we call that a gain. And then when you either make a gift or you sell it, we call that a disposal. And if there's a difference from the day that you bought the item or the house, in this case £1, to the day you make a gift or a sale, there's a gain of £100,000, that will trigger capital gains tax. Yeah? Now on land, on a house, on land, that figure is either 18% if you're a basic rate payer, income tax wise, or that figure is 28% if you are a higher rate taxpayer. Think about it, if you're landlords, the house is in your name, section 24, etc., it's quite easy to trip over on the 28%. And so 28% on £100,000, you do the maths, that's a big chunk of change. All right, so then now let's ask the question of who pays it. So the one who makes the gift is the one who's liable to find the money to make the payment. Okay, and when we're using trusts, we can do some clever planning. All right, so with trusts, there's something called Section 260 of the Chargeable Gains and Tax Act 1992, okay, where you can, it's called holdover relief, okay? Sorry, gift relief, not holdover relief.